Hi, and welcome to today's episode on Tor options. For you guys who don't know me, my name is Tor, and I like to write puts. For today's episode, I want to talk about Biden's stimulus deal and earnings season and how to play it. So, this week has been pretty good all over. I've adjusted my portfolio. I've started to sell calls and bear call spreads. This is because I want to be more delta neutral in my portfolio and hence don't have those sharp movements relative to the market, given that we are in a kangaroo market. So I do believe it's pretty nice to be more delta neutral. I want more stable return, essentially. That's why. And it's many EV companies that had a crazy run up recently. And these are way overpriced in my opinion. The same goes for stocks that recently IPO'd like DoorDash or ticker Dash, which I'm very bearish on. I feel the EV sector is like the tech sector early 2000. It's all based on future growth and nobody of those companies earn any money. And it's definitely a bubble out there. And yeah, but some might earn money of those companies that are recently mentioned, but for instance, Dash is insanely priced compared to the competitors. So hence, those stocks I'm currently bearish on. And for this week, I'm up 0.6%. I also did a deposit to my account to increase my purchasing power, which I'm stoked on. S&P 500 closed this week down 0.9%. And VIX again spiked up yesterday to 24.3. It's so weird. Every time you think Wix will fall down to below 20, because you're thinking, yeah, everything is fine, it's going somewhere, right? But then suddenly XYZ event happens and Wix is above 22. But I don't mind it at all. It's fatter premiums out there to grasp, so I love it. So for Biden's stimulus deal. This week, President-elect Joe Biden unveiled a $1.9 trillion stimulus package. And just to cut to the chase and what I really care about, and what probably you guys also do, is that we will also get $1,400 as direct relief check and increase the minimum wage to $15 per hour. And so all good and everything, but this package is not set in stone, and it will most probably change. Remember, before we dwell more on it, remember that the Senate is 50-50 split, with Kamala as the tie-breaking vote. If the Democrats don't get 10 Republicans on board, aka bipartisan project, then they will, because you will need at least 60 votes, aka 50 Democrats and 10 Republicans to break a filibuster, means the package will either have to be slimmed down dramatically or possibly pushed through on a democratic line basis using a process called budget reconciliation. So far we know that the Democrats at least need 10 Republicans. But so say that in the first case, yes, the package is slimmed down and then it passes the Senate, Congress, and Biden writes under it and everything. But say that this doesn't happen and they would rather push it through a party line basis using a process called budget reconciliation. So a reconciliation allows bills to pass the Senate on a simple majority, which is pretty simple for the Kamala or for the Democrats, given that they have Kamala Harris as the tie-breaking vote. But in order to do so, the Democrats would need first to pass a budget resolution setting out spending, tax, and deficit targets for the upcoming years, which is although also political risk, and hence. And this is sort of risky move at the first, I feel, but I don't know. I feel Biden wants to cooperate with the Republicans on this matter and sort of unify America. So I feel he might try to go for that first scenario where he will negotiate with the Republicans and at least get 10 votes, essentially. But given this, so to get 10 Republicans is quite hard given the current political situation. So I think Biden on purpose went too big on the package just to give it some wiggle room when they're going to start negotiating. So in my honest opinion, I do believe a package will get passed and everything, but I think it will definitely be slimmed down because I think the second process, budget reconciliation, involves other political risks that they don't account for yet, and hence it sort of restricts the scope and the cost of legislation of this package. So he's gonna aim to negotiate with the Republicans, but and everything like the government process, etc. Yeah, super interesting, but say that the package do pass in the current form, then I am afraid, honestly, that inflation will spike up, given that you pump up so much money in the economy, and hence, yeah, that is very bad for low-income workers and elderly, obviously. You don't need to go to school or anything to understand that, but say that in the medium term, when if inflation will spike up, then that's also bad for investors, and hence I'm sort of tilted in favor of this package maybe get slimmed down a little bit to sort of rule out that inflation risk there, but I don't know. I don't know. I don't know much. I don't know much about this subject itself. It's just my opinion, given what I read, and what I see, and what I feel about government and government involvement in the economy. Obviously, it is the economy obviously need a package, some sort of a relief bill, but how to go about it, how big it should be, XYZ, it's hard to say beforehand. Can really just look ex post on this subject. So it's this time again, earnings season. It's when companies release their financial numbers for the previous quarter. So what's important to mention relative to earnings is 1. Did the company beat expectations by Wall Street analysts, and 2, how is forward guidance for these companies, especially relative to growth stocks. So as a trader though, earnings season is pretty fun because it's more volatile relative to the rest of the year. But earnings are in fact a very dangerous thing to play, given it's a binary event. A company can beat the hell out of expectations, but it can still go down 10-20% because the forward guidance is lowered, for instance. And myself, I've tried to play earnings before, and it was profitable indeed, but it was sort of stressful, especially when the company release their earnings after hours, and then I'm sort of in bed, given that I live in Norway, aka Europe. So for earnings though, given that it is stressful and everything, like we all agree on it, volatility is stressful, but we can earn money on it. So sort of for me though, it's more like if the company earnings sucks really bigly, like they did not beat expectations at all, forward guidance is medium, like then you either gotta activate those diamond hands or close it for a sore loss, brother. That's all you can do. So anyway, notable earnings for next week. Tuesday we have Bank of America, Goldman Sachs, and Netflix. On Wednesday we have Morgan Stanley and United Airlines. So what's most interesting, and why you probably listen to this, is how should I play earnings? So in my take on it, so say that we have airlines, for instance. Say that you want to bet on American Airlines or Delta. but then I will probably wait until another more comparable company has released their earnings. For instance, United Airlines. I don't know if American Airlines nor Delta has released earnings. This is just me talking about a hypothetical case. So say that you are betting on American Airlines, and then you maybe should wait for United Airlines to see how they perform given earnings, because you sort of think, or these are very comparable companies, and hence they should have a comparable performance relative to when they release their earnings. So I think number one thing is to wait until a comparable company has released their financial information for the previous quarter. And I also believe that as a theta gang, or like as an option seller, if I am bullish on this stock, then I'm gonna still sell a put, but I can probably sell it for a little bit, a strike that's a little bit lower, given that IV, or implied volatility, always tend to increase before earnings. This is because people get more uncertain. How is the earnings? Will it be good? Will it be bad? Etc. So if I am bullish on this company on earnings, I'm gonna goddamn sell a put. Or if I want to be more risk defined, I can do a credit spread on it. If I want to bet on a range, bet on the implied move, given the financial outcome, then I would probably just sell an iron condor. Like it's not betting on earnings as a option seller is not really that much of a difference than normal trading. It's just that these events like earnings, they are more binary, and hence they can go strongly and quickly against you. So this is really how you should play earnings. You should wait until a comparable company release their information. Obviously, it sucks though if all the comparable companies release at the same day. Then it's different. But I'm not talking about that. But for instance, in this airline example, then I would wait for the first comparable company to release their earnings, and then if I see this was actually pretty bad earnings, and the stock went down 10%, then I would probably sell a call on that company that I want to play earnings on, for instance. So this is how, in my opinion, I would play earnings. And although maybe the stock goes against you the next day after the released earnings, but you can still earn money on earnings given IV crush, implied volatility crush. So IV crush is essentially, so IV is implied volatility. We know that this is sort of what the market expect in the future, the implied volatility, what the volatility will look further on. And IV always spike up before earnings. This is because it's more uncertain. How would the financial numbers be, etc. So right after they release all the financial numbers, the guidance they had, the earnings call, etc., then implied volatility will sort of just diminish instantaneously. This is because now we know everything. We know what we wanted to know. So hence, yeah, the stock can go against you post earnings, but you can still earn money on IV crush, essentially. So that's sort of maybe a parachute for you, but that depends how strongly this stock goes against you. If it goes up 50% or down 50%, you're screwed anyway. But if it goes down like 5%, then you can still, or if it goes 5% up or down, and but the basis is against you, then you can still earn money on IV crush, essentially. So this was sort of a ramble episode on earnings, and I hope that you get some out of it. Just remember one thing: earnings are dangerous. Wait for a comparable company to release their earnings, and then decide your move. Alright, so if you like this episode, then subscribe to me. If you want to contact me or have a comment on it, then go to my YouTube channel, which is Tor Options, and post a comment on the section there, and I will get back to you ASAP. And until next time, happy trading!